Greetings in the name of Yahusha HaMashiach, Melech of Yasharal, Khan forever according to the order of Melchizedek, all esteem, honor, and glory unto our Lua, Yahuwah. This is Melek Shalama Trading, and I'm going to just recap here on the ES today. Today is what's the date? The 9th of June 2025. It's 2:51 p.m. and Eastern Time. So this is going to be a breakdown of the Wycoff theory and my Black Swan strategy. But before we jump into that, I'm going to do the risk disclosure. So 1 second, let this play out.
General disclosure. All MELEK SHALAMAH Trading LLC materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
All right, so now that we have the risk disclosure out of the way, let's look at the beginning of the session, right? So we're going to start here. This is 9:30 Eastern Time. This is the beginning of the session, and you're going to see these dashed green lines, right? So those are upper deviations. That's the first upper deviation, second upper deviation, 2.5, and third upper deviation. Similarly, after the VWAP, this is the solid green line. We have first lower deviation, second lower deviation, 2.5 lower deviation, and third lower deviation. So when we open here, we see that we have liquidity at 6,000, right? I have to adjust this because I like to have everything in perspective correctly. So this is my nightly VPOC. So the VPOC at the beginning of the session, which would be the overnight session, would be here. 1 second. Right, so that's the nightly VPOC right there, that light blue line right there at 6,016, right? So we have liquidity here at 6,000. We dip down, we come down here, we basically test where the liquidity came in after this test here at 6,050, right? So we basically we tested this level. It seems that someone bought and then they put the liquidity in the book at this level, right? So basically this is supporting liquidity.
Sweep ES sellers.
So now we push up here. This is the first push up, right? We have a push up here. We created a high right here of, let's see, highest price was 6,019.75. Now this is going to create our preliminary supply, right, which is labeled here in the custom notes. After we get the preliminary supply, how do I know this is the preliminary supply? Well, this comes after we get the whole structure kind of developing, right? I know this is a preliminary supply because we get the first indication of selling, right? After the big buying, we push up, we get the pullback, right? We get consolidation, and let me just use the arrow, right? So we get the push up, preliminary supply created. How do I know this it's a preliminary supply? Well, this is our first indication of selling, and then we consolidate, right? We get another push up. We go through liquidity here, right? Liquidity on the offer. We push up to this level here, and we create the buying climax. So where is the buying climax? Let's see what level that was. So that's 6,026 and 25, right? So how do I know that this is the buying climax? So I'm going to open this up a little more. Now the buying climax is happening where, now I'm going to show you another chart where I use the volume pressure and the volume pressure imbalance and some buying sweeps and sell sweeps, right? To give more indication of where let's say buying exhaustion and preliminary supplies, and basically exhaustion from the buyers is happening, right? So what we have here is a stop run, 317 stops. We have iceberg sellers 125. We have liquidity on the offer. Also, we have liquidity on the offer here at 6,020, and we have liquidity on the offer at 6,025. Now, this for me here is a sign of exhaustion. So you see we have this buying bubble up here. The last price interacts up here at 6,026, roughly 50, right? And then we start, this white line here is the last price. Now this here, this dashed green line is +3 VWAP, upper deviation. Now this is a volume weighted average price. It's an extended value, right? It shows from a volume perspective where there is possible exhaustion could take place. So within my Black Sun strategy, I look for a development of the Wycoff distribution around certain pivot levels, resistance pivot levels like Camarilla R3, R4, and floor pivot R1. I look for that. I look for these upper deviations to be in alignment with those pivot levels. So these pivot levels aren't marked on this chart, but we're going to go over to another chart, right? I'm just breaking down the distribution pattern that we're going to see. So this is creating the buying climax. We get a pullback. We retest 2.5 upper deviation. We get the same selling buying exhaustion there, right? We have volume, no follow through, creating a lower high, and we pull down here to create the automatic reaction. So what the automatic reaction is after the buying climax, we get the initial pullback, right? This is going to create the bottom of the range, right, in the distribution range. Hold on one second. So this is creating the bottom of the range right here. This is the automatic reaction at roughly 1625. Let me just open that up a little bit and we could get a right. So 1625. So that's the automatic reaction right there. We have the base of a possible base for the distribution structure that may develop right now. So this is kind of like the criteria is looking for the distribution pattern to develop, right? So what do we have here? We have liquidity absorbing buyers on the offer. We have liquidity above the top, the buying climax, creating somewhat of a resistance from a liquidity perspective on the offer. We have iceberg sellers, right? And we have a stop run 317. So we're getting pressure from above. We found some support here at the automatic reaction. 100, actually 1127 iceberg buyers, right? So that's a lot of iceberg buyers right there creating that support. So that's a lot of contracts to actually create that support right there. So that's kind of telling me as well that there is some selling pressure here that has to be absorbed. 1127 icebergs, that's a lot, right? So as we push back up, we do not get to this liquidity, and this liquidity, we run into 2.5 upper deviation, right? We create a little uptrust right there, a little test above the buying climax level. We get above it a little bit, probably like one tick, and then we get a little pullback. We have selling exhaustion. Iceberg step into support price, right? Just below the second upper deviation. We push back up to the second upper deviation. We have liquidity stepping in now on the offer. We also have this liquidity from before that wasn't breached by this level. We come up to this level, heavy volume, we get buying exhaustion again, right? We don't get through this liquidity level. This liquidity moves up a little bit. We get a little pullback, a retest of second upper deviation, pullback again, retest second upper deviation, heavy liquidity stacking on the offer. We have iceberg sellers, iceberg buyers, more sellers than buyers. We have a stop run here, right? Selling stops. We have buying stops increasing. And now we start getting exhaustion here at the second upper deviation and creating an uptrust again. This is pushing above this level, this little spike here, those white lines. That's pushing above, creating the uptrust, right? So the uptrust is created at 60.2750, right? So as that is being created, we have the initial pullback. So this for me right here, if everything is aligned properly, I would have a trade set up right here, right? Because after the buying climax, I'm looking for a trade entry where we get a push above the initial buying climax, which would be at 60.2650. We get a push up to 60.2775, right? And now I'm looking for a trade entry right here. Now, if I open this up a little bit, you will see that there's majority sellers coming up to this level here at the second upper deviation. Sellers take control, retest, no go, liquidity steps in the book, right? And then we get some buyers attempting to take price up again. They fail, buying exhaustion, and we start moving down. So this for me right here, the way I enter these trades, I like to enter at the buying exhaustion. I'm not waiting for too much dip and confirmation of a retest. I want to enter where the buying exhaustion is actually happening. So for me, this would have been an entry, but I was a little more conservative today because I didn't have my certain criterias within my strategy, right? But we'll get to that. So this could be an entry here at 60.27, and the first target would be 60.2050. The reason this would be a target would be because there is liquidity here, right? And this is the first upper deviation, so it's second upper deviation to first upper deviation short, right? So this would have been a nice little 7-point trade if I got to this liquidity level here, right? Now the reason that I would take this off right here would be because we're actually trying to get to the automatic reaction, but this liquidity here is only coming in after we get this dip down and we start pushing back up. So the thing about this strategy, I realized that don't really stay in these trades too long. It's not for me anyway, right? This is my strategy. I'm just kind of breaking it down so you could maybe get ideas for your own strategy, because every strategy has to be kind of aligned with your personality, right? So this aligns with my personality. So I realized that after taking some, like doing my Excel spreadsheet and kind of calculating how long my trades take, I realized that my trades don't really take that long. It's like a couple minutes for the most, right? Maybe 5 minutes, right? So when this trade comes down to this level, there's liquidity in the book, there's iceberg buyers, there's 218 stops coming out here, right? It's a good place for me to take profit and wait for any little pullback, maybe to this level, and then I could see if there's another buying exhaustion entry that I could take up here, right? Now, what I'm really trying to get to is from the uptrust level back down to the automatic reaction, because that's the base of the distribution structure, right? So I'm trying to get down to that level. Now, this could be a good setup here because we have a lower high, right? This is a test of the uptrust level. We have buying exhaustion. We have buyers only, but no sellers yet, right? So the buyers are basically struggling to keep price up, but they're not going anywhere, actually going in the wrong direction, right? So there could be some absorption here, but this could be another good setup because there's liquidity on the offer, pressing down on price. We have the second upper deviation up here. We have the uptrust retest, right? We have this first liquidity to get through at 60.2250. I'm not really trying to take profit there. I'm trying to get back down to this automatic reaction. So there's liquidity here at 60.18. That would be the first place I would likely want to take profit. I would see what price is doing around this level, but basically I'm trying to get down to the automatic reaction and the first liquidity above that level, which would be this one right here, right? So let's see what price is going to do here right now. Let's see if we're going to get down to the automatic reaction. And actually I'm going to go over to this chart right here, which has the buying sweeps. Those are those green bubbles right there, and you can see buying sweeps is basically for me it's an indication of a potential reversal, right? So we have 88 buying sweeps, 145, 92. We have the stop run here again, 317. We have the iceberg seller, 527. We also have on this chart here selling absorption. So you can see here sellers absorbed 108 of this buying right here, right? All of these are little indications I use to show where the buying climax could potentially be happening, right? So we have the buying sweeps again, 64.250. We have the pullback, right? So buying sweeps, pullback, push down, buying sweeps, buying sweeps, buying sweeps. We have the pullback. The pullback. Then we have buying sweeps here again. We don't have any here. We have some here, right? So the buying sweeps are basically it kind of dried up a little bit. The next time we have buying sweeps is up here. We create this this retest here of the uptrust level, right? And now we're trying to get back down to this automatic reaction level, and we have the liquidity here. Now this volume point of control has now migrated up to this level. So there's a lot of volume in this area right here. Now, is it selling pressure? That's yet to be seen. If we get a breakdown of this automatic reaction level at this level here, and we start breaking down, creating LPSYs, which are basically breakdown, retest the automatic reaction, sell, retest. So these would be the LPSYs, right, as they break down. Now let me bring this across here real quick. So this is one of the reasons I have my checklist here. This is one of the reasons that I didn't take the trade today. Now what I do have is, so I'm looking for some pivot levels, right? So where is it here? Let's see. Right, so development, and I gotta fix that, that's wrong spelling right there. So development of Wycoff distribution structure at pivot resistance level. I only gave that a 7 rating, right? Because my Camarilla R3 monthly level is here, right? And I don't have anything else. Now this is a good level to operate from, right? It's decent, but what I'm looking for as well is some daily levels. So my daily Camarilla R3 is up here at 60.33. Now, the thing with these Camarilla levels and floor pivot levels is that it's not one definite level. Like this level here at 60.33 is not exactly at this level. I don't have to have price come exactly to this level. What price could do, or what price usually does sometimes, let me just do this real quick. Right. So what you would see here is there's liquidity above here at 60.35. That's 2 points above this Camarilla R3 level, right? So sometimes what you would get is a stop run above the Camarilla R3 level, exhaustion, and then you would get the sell-in entry up here, right? So it is a resistance level, but sometimes you get stop runs above that level that tag the liquidity, right? Sometimes you actually get this exhaustion or rejection right there, and you get the selling, right? So it's not how could I say it? It's not a exact level, or it's not a mechanical level where you just enter exactly at the level. It's basically like a zone, right? So all of this would be like a zone for Camarilla R3. For this monthly level, it's even on a higher time frame, so the zone for that would be much bigger. Just like this distribution right here, the zone for it would be much bigger, right? So this is also previous week's high, yesterday's high, right? So all of this is kind of in line with, having stops above this level, stop runs above that level that create the distribution pattern here, right? So let's take a look at the checklist, right? So we're looking for a Wycoff higher time frame action level. So this would be the automatic rally right here. This is the creation of an uptrust on the higher time frame level, right? So we do kind of have that, but if the trade happened around this level here, it would be because this is happening now. This uptrust action is happening right now, is being created right now. So it's not a level that was already there, right? So after this, so I didn't even check that as I didn't even give that a rating because it really wasn't there before, right? So we're looking for liquidity on the ask at resistance pivot level area, right? So I gave that a 9 because we do, let's see, let's bring this across. We do have liquidity at the resistance levels, right? Camarilla R3 and all this liquidity right here. Right, so we do have liquidity on the offer at these levels here. Camarilla R3 monthly level, Camarilla R3 on the daily, right? So we have the liquidity. Gave that a 9. Development of Wyckoff distribution structure at pivot resistance level. So this is happening at Camarilla R3, the monthly level. The distribution is happening here, right? We have the distribution taking place. You see, we came up here, we retested that uptrust level. We had another retest at this VPOC migration up to this level. So this is now VPOC for the day. We're getting resistance, sellers are stepping in, and we're breaking down, right? So we're trying to get back down basically to this level here, which is the automatic reaction at roughly 60, 16.25. This is in line with VWAP, right? So let's see, we're probably going to get that trade as well, right? So what else are we looking for here? We're looking for liquidity absorbing buyers on the ask or offer at preliminary supply, buying climax, uptrust, and uptrust after distribution. So basically, this is the liquidity absorbing the buyers, right? It's on the offer right there. Let me just move this checklist out of the way for a second. Right, so that's your preliminary supply, that's your buying climax and stuff like that. We have the liquidity on the offer absorbing the buyers, right? Absorbing the buyers, absorbing the buyers, absorbing the buyers right here, absorbing the buyers again. All this liquidity is on the offer, right? So we have that. Let's bring this back across. So now we're looking for high volume buying at the buying climax, uptrust, and uptrust after distribution. So let's see. Heavy volume, right? Volume not so heavy here, right? Up at this level here, heavy volume, heavy volume, heavy volume, right? So we have to have heavy volume at these buying exhaustion levels. So that's a check. We're going to check that as well. Let's see how much I gave that. So that's a 8. So Wycoff structure development in the upper VWAP deviation bands. Let's see. So this is third upper deviation, 2.5, second upper deviation, and first upper deviation. So it's safe to say from first upper deviation to the third upper deviation, we have the distribution pattern taking place, right? So it's in the upper deviation bands. So check for that. So let's see how much I gave that. I gave that 9. So buy sweeps, buy stops, and at buying climax, uptrust, and uptrust after distribution. So let's see. Buy sweeps, buy stops, buy sweeps, buy sweeps. You know, we have the absorption as well. We have the buy stops 154, buy stops 67, buy stops 81, right? We have the buy sweeps, buy sweeps, buy sweeps here, and we have another buy sweep taking place right now, right? So we do have the buy sweeps where, let's see how much I gave that. So buying sweeps, so that's a 8. So buying exhaustion at buying climax, uptrust, and UTAD around resistance pivot level and or Wycoff higher time frame level. So see, we're going to bring this back across, right? So we have the buying exhaustion. Let's move this for a second. Right, so we're going to read that again. Buying exhaustion at buying climax, uptrust, and UTAD. So basically, buying climax, exhaustion, uptrust, exhaustion. We have the retest, exhaustion. So that's we're going to give that, let's see, that's a 9. So volume pressure and volume pressure imbalance buying spikes at buying climax, uptrust, and UTAD. So let's see. So we're going to open this back up now. Right, so I actually turned on my market pulse indicator after this took place here, but we're going to open it now and we're going to come back on one of these retests. Let's see. Right, so we have this uptrust level here. Let's open it up and see what we got. So at this uptrust level, we have volume pressure and volume pressure imbalance spikes. Those are the red and the purple right there. So it's green turning into red. I put the red at the threshold, right? So when it's at the threshold, meaning it's exhausting, it's turning from green to red. The reason I put red is because that's indicating that there's going to be buying exhaustion and a potential reversal, right? So you see after it spikes here in the purple and the red, the blue is actually turning into purple on the threshold. When it crosses the threshold for buying exhaustion, the green is turning to red. After we get this, we start getting it moving back down. So volume pressure is moving back down. Volume pressure imbalance is now crossing over to the sell side, turning from green to purple and coming down to this level. So the selling volume pressure is now spiking on the green side, indicating that there's going to be a reversal to the upside. We have this, right? So after this signal for buying exhaustion, it pulls back a little bit, selling exhaustion, we reverse a little bit again. We have this spike here. We have volume pressure spike. No volume pressure to the buy side. It basically just came back up from selling pressure cross the threshold back up to green, so volume pressure on the buy side again, right? Look at what's happening here. There's buying exhaustion when the volume pressure is to the buy side, where it just basically just creep back above the mean. We start getting a pushback down again. We have buying spikes, big volume, pulling back. So this is one of my indicators that I use at these possible buying exhaustion levels that shows me, right? So there's a spike here, right? When we retest this uptrust level, we have volume pressure spiking to the upside, and we actually have volume pressure imbalance heading to the sell side. Good entry level, right? Because the signal is basically, the volume pressure on the market pulse is basically showing you there's buying exhaustion, right? Because the buyers are tempted, they're exhausted. The selling pressure is spiking to the downside, which is indicating a reversal to the upside. But as you can see, the volume pressure imbalance is now going to the sell side. And you could look at the bubbles, majority sellers, aggressive sellers, right? Good entry level right here on the retest of the uptrust. And that's where you get the first trade. Well, I didn't take the trade, but I just opted out because it didn't really get up to 60.33, which was my daily Camarilla level. So I was kind of just being conservative and waiting for that to play out. So that would have been a nice first 7 points right there. Back to this liquidity on the offer, liquidity target on the bid. So now this was the second trade here that I didn't take, but just pointing out the strategy. Liquidity on the offer. We have sellers absorbing 199 on this big buying bubble here, 277. So 199 of those got absorbed by sellers. We have liquidity on the offer. Let's open this up a little bit, right? We have buying exhaustion there. Didn't get to the liquidity on the offer. How much is on the offer right there? Let's see if we can, 122, right? And we start getting an entry here, possible entry. So buying exhaustion, we're getting buying spikes from the volume pressure imbalance. That's turning red, so that's crossing the threshold. We have volume pressure spiking, turning purple, right? So all of this is spiking right here. Good entry signals. Volume pressure is strong. Volume is strong, right? From here, volume is strong. Volume is strong to the buy side. And we start getting selling volume. Volume pressure imbalance, and volume pressure is now pushing down to the mean and possibly, volume pressure imbalance is crossing over to the sell side, right? We have a little consolidation as we kind of curve around the mean or kind of jostle and move around the mean, and then we start getting that selling pressure coming in, right? So now you got your entry up here, Black Sun strategy at the uptrust level, but I have this as my resistance level, still just basically being conservative and not operating at this Camarilla R3 monthly level, kind of waiting for this level here, the daily Camarilla R3. And basically you got your sell entry up here. Stop is right above, could be right above this liquidity, because I don't need a big stop to know if I'm wrong. Buying exhaustion is basically what it is. It's not supposed to move above buying exhaustion. If the buyers are exhausted at 60.2775, my stop could go at 60.2850 or 60.2875, right? I don't need much. And the liquidity is right there. Once we break above that level, my trade is wrong, right? So with such a small stop loss, I could actually add a lot of contracts because it's not going to cost me much. And the risk to reward would be very good. Let's say I'm targeting from 60.2775 short entry, and I'm trying to get to 60.1575 back to VWAP, right? So we're breaking down this first upper deviation right here. The trade is basically happening at second upper deviation, that dashed green line right there, right? Exhaustion, breaking down to first upper deviation, consolidate, break down again, and now basically we're just waiting to get down to this level here. I would probably trail my stop now to like this level. Once we get this retest, trail the stop down to this level. We get the consolidation, we get the break of first upper deviation here, trail my stop down to this level here, and just wait for the trade to play out. Not really looking for buyers to break above structures, right? Basically LPS wise, lower points of supply, looking for sellers to maintain that control and push us back down to this VWAP level. We have this liquidity here at 60.17. So let's see, I'm just gonna let this trade play out now and let's see what's happening. So we have a lot of buy and sweeps coming in here. So the thing about buy and sweeps as well, if we start getting buy and sweeps as we're moving down, I don't want to see price start breaking above these structure levels, right? So let me just... So around this level here, I don't want price to start breaking above that level. Now, once we start breaking above that level, I'll start being very cautious, right? So what price is doing right now is respecting that level and possibly moving back down to VWAP now, right? So once we have these little consolidations, I'm starting to get buying sweeps. There is some buying pressure coming in here, but once they don't take it too far above, like this is basically a retest of this structure right here, right? That's the last price. Retesting the breakdown of this structure right here. Once we don't push above that level too much, like right now I would be considering taking this trade off, right? Around this level, we break above here again, possibly want to take this trade off. What I'm looking at here is aggressive sellers, but they're not moving down, possibly getting absorbed by buyers right here. So let me clear that up. So let's see what's going to happen. We have liquidity on the offer. And let's see if we're going to get our move back down to this liquidity here and VWAP. We have this buying iceberg here, buying iceberg here, right? Trying to support price. We have selling absorption. So the aggressive sellers coming in here, that's a lot of sellers. Let's see what we have. 371 volume in this bubble right here. Aggressive sellers. But they're still not moving down, so possible absorption right here. Buying absorption. So let's see. And again, this would be a trade here from buying exhaustion, 60.2750. We're trying to now get back to the automatic reaction was, let's see, 60.1625. Right, so we're basically trying to get back to the bottom of this range here. Right, so let me just do this. That's the bottom of the range. That's our target from this trade entry here. So this is what you're hearing right now. at this point, I'd put my stop right here at 60.21. And now we're seeing heavy volume, and we're still not aggressively moving down. So I'd still be cautious around this level here, looking for any potential reversal here, right? Because we have heavy selling, but we're not moving down very quickly. We have this liquidity here. So I'd be prepared to stop out of this trade very quickly. So I'd open this up here. And let's see if we get any buyers trying to come back around. Let's say up to this level. Anything more than this now, I'm stopping out. So my stop would now go to 60.19. And I'm out the trade right there. And the reason being would be there's too much selling volume for this not to continue. To me, it's the risk of this reversing is getting stronger, right? There's buying sweeps, consolidation. Then we had another takeover from the sellers. We have a heavy bid right here, 247. Possible buyers aggressively stepping in, absorbing this liquidity here. So heavy volume selling, but I'm not seeing straight price action into my liquidity levels and VWAP. So this would be good enough for me right here. After that, we could get the target, but just in reading the price action, reading the volume, I would say I'm good on this trade, right? So yeah, that was basically a breakdown of my Black Sun strategy and the Wycoff theory at my resistance levels. Didn't take this trade today, so just being a little more conservative today. And let's see, maybe tomorrow I'll get a better little setup. Maybe it'll give me that stop run up to Camarilla R3 and I'd be at my daily resistance level. And let me just point out, this wasn't a bad setup here. I'm not saying it's a bad setup. Just today I was just being a little more conservative, I guess. You know what I'm saying? So there was two trade setups here from the buying climax down to the automatic reaction, right? So the buying climax around here at 60.2650 came down here to around 60.1650. We had another trade setup here, potential short trade from 60.2750, got down to 60.23, started to reverse. I'd probably stop out of this trade, probably take another setup here as we retested 60.2750, come back down to this level here. I would probably stop out around this liquidity level at 60.20. There's another setup here. We come back up, we retest, take this trade down to that level where I just showed you I'd stop out. So yeah, so that's my Black Sun strategy, Wycoff distribution at a resistance level and using upper deviations and volume pressure imbalances from the market pulse. Let's see, using the heat map liquidity levels for resistance and targets, using the iceberg and stop detectors from the MBO bundle to show where there's possible absorption and resistance, right? So 527, hold on, let's see. So 527 iceberg sellers, or actually that's absorption sellers, right? So that orange line right there, 527 absorbing on the offer. So all of these things, the buying sweeps, all of these things are basically showing me where the distribution is taking place and the buying exhaustion. So as you can see here, where I told you I would stop out from 60.19, right around here, I told you I would stop out right there. We're actually getting that reversal, right? So there's no longer any need to be in that trade. Once you see heavy volume, it's not getting to the liquidity. We start to consolidate, move my stop above here. Once we come back above that structure here, just stop out the trade, right? Take the profit and go, right? All right, y'all. So it's MELEK SHALAMAH Trading, a breakdown of my Black Sun strategy. This video was 45 minutes long, man. I hope y'all stayed for the whole thing. All right, y'all. Trade safe and stay blessed. Shalom.